Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, I have Corey Peterson. Corey is the CEO and founder of Kahuna Investments. Corey has acquired over $250 million in real estate and has raised over $100 million in private equity. He is the best-selling author of Copy Your Way to Success, Standing on the Shoulders of Giants, and hosts the Multifamily Legacy podcast. Thanks for joining us, Corey. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, I started off I was a used car salesman that didn't really make it through high school or college, right? So I made it through high school barely, but I read the Purple Book when I was 30 years old, Rich Dad Poor Dad, and got the download from the mothership. I mean, I knew that I wanted to do that real estate, and so I started reading a bunch of books on real estate. 2005, I decided it's time to do it. And, we created a company and we called it Kahuna Investments. We had previously went to Hawaii, and I kind of met my first mentor. His name was Bruce, and I call him Bruce Wayne, right? He wasn't Batman, but he had a lot of money, and he owned real estate. He owned apartments. And so he was a good example of what I think the cash flow life looks like. And so started real estate, but I didn't start in multifamily. I started like a lot of us. I started off in single family doing wholesaling and fix and flip, and then learned the power of raising private money. I was raising private money for my single family fix and flips because in 2009 and 10, there was no banks lending money. So you had to go find private money. Got really good at that. And then I realized that I could never scale single family the way I wanted to. And ultimately decided to pivot and went to the apartment industry. 2011, we bought our first deal, and we raised $1.4 million and bought it for 3.2, and sold it 5 years later for 8.8. And I was hooked at that point, and that's all we've been doing ever since. And we now have a decent portfolio of about 10 active deals, $250 million of real estate, and it's been an amazing journey along the way.
Awesome. I love that story. Is that a Hawaii picture behind you?
That's it. That's my sunsets and palm trees. That's me trying to live the lifestyle, baby.
I love it. I mean, that's why we're in it to live, to get that financial freedom and provide that for our investors. Well, today I want to talk to you about from LOI to close, the untold story of all the things that could go wrong. Some people think, once you get a deal under contract, it's all unicorns and money rolls in. But there's a lot of things that could go wrong. It's a never-ending whack-a-mole. So, I mean, let's start with what are the first things that could go wrong once you sign that LOI?
Yeah, it's funny how this works. It's Murphy's Law most of the time, right? And by the way, your job's always to kill deals. And we've went on deals plenty, not a lot, but we've signed that LOI, right? You're like, okay, I signed it and I sent it off to the seller, and I thought we were all in agreements. And all of a sudden, there's red flags. Like, well, hold on, my partner or my this or my that, and all of a sudden it starts getting complicated. You're like, wait a second, I thought we agreed. And then all of a sudden, well, no, we want more money, or we want more earnest money. We want like all of a sudden, and this happens more often than not. It's crazy, kind of crazy how you think, but you think we both agreed, everybody was back and forth, but then something happens. And a lot of times in the very beginning, if that breaks, it's usually because they have a undisclosed partner that they did not tell you about, right? So that's rule number one, right? You get there, you're like, oh, right? So then you sign, finally, what happens if hopefully at that point you resurrect the deal, right? And you get everybody back in, corralled into their little space. They sign the sucker. Well, now we got more work to do, right? This is now the journey to let's do a site visit, right? Let's do our due diligence. And normally, not only when you get that, from LOI to, sign an LOI, there's this next step, which is called PSA, purchase and sales agreement. And again, this is another contentious part of the deal where a lot of deals just break up just because you signed an LOI. Doesn't mean that the details are done yet, right? LOI is just, I think we're going to do a deal. And usually lawyers get involved. And this is how I like to do it, by the way, is I have a great attorney. And this is, not all attorneys are created equal. Let's all agree to that. And you want your BMF, your bad mother, fajucker, that can do this type of negotiating for you, because I have found it is way easier to negotiate with your attorney versus to another attorney on details than going from you to a broker, right? So what happens is when you get into your PSA and you're trying to make it all work, sometimes there's some little discrepancies that are not quite there yet. And I find that just working with my attorney is the best way to do this. But again, these are details that are potential breakpoints of deals just blowing up. It happens more often than not. Let's say you get all that stuff done, right? And the attorneys finally get together. And this is usually 2 or 3 week process and in the meantime, you're formulating your team. You're like, at that point, you got to corral all your chickens and, who's going to be on my GP team and who's doing this and who's doing that. You kind of really consolidate what your GP is going to look like. And then usually all march to due diligence, where now comes the next piece of this thing, right? And Gary, a lot of times this is the other phase. Like we went to a property one time where we're doing a due diligence, and this property was in Mississippi, and the manager of that property, she loved dogs, and we're like, oh, that's fine. We love dogs too. But come to find out, when we're doing our due diligence, this girl's a big, huge dog lover, like big dogs. She likes big dogs, and big dogs create big piles of poop, right? And come to find, every person that she loves wanted to rent in the community was a big dog lover as well. And so we had 100 big dogs. Like usually in apartments, we have a breed or a size around 35 pounds, 30 pounds, right? These are all big, huge dogs. And as we went to the unit by unit inspection, we're like, oh my God, dude, every unit smells like pee, has got damage beyond what would be normal. And again, so you're like, wait a second, we got to repencil because that's not in our budgets. And typically, Gary, this is where deals blow up again, because when you start getting into the nitty gritties of going into each and every unit, your goal at that point is truly to start collecting data, and usually use this data, invoices, and having contractors submit invoices to go back to the seller if you have to retrade. And you should almost, because here's the real, most sellers have not been to their property in 2 to 3 years. Most of the time, they have no idea what it looks like. They just have a property management company that is telling them that everything's great. But then when you give a bunch of data and you say, hey, like one time we went to this property and there was a guy that was on the second floor of a 2-story garden style apartment. He would take dirty diapers and just from the ups, throw them on top of the roof.
Oh my God, that's insane.
I mean, dude, it was pig pen up on the second story as we're doing this roof inspection. It was like, what in the world? And so we took photos of all this stuff, right? And so as we're retrading with the seller, we're like, do you know that you have this? And we like give them the photos. And it's amazing what happens, right? They're like, oh my God, they're like, oh. And so the goal is if you're gonna retrade, make sure you have it with a pile of evidence, right? Invoices and all these things. And a lot of times, again, this is where if I'm going to retrade on a project, Gary, most of the times I'm not going to try to go back to the broker, because guess what? The broker is good old boys with the seller most of the time, like they're friends or something like that, right? And they hate to retrade. They don't like it. They feel like that is something on their integrity or their badge of like whatever. And so they make retrading difficult. And I don't know why they do this, but because the whole goal is to put a deal together. But I found that more times than not, I always do this with my attorney. And my attorney will like submit the stuff to the other attorney. And like, here's what we found. Here's the invoices. Here's what we're going to want off. And I'm telling you, more often than not, we've been able to get bigger, significant reductions of pricing because my attorney's just dealing with the other attorney. It's just kind of a matter of fact. There's no emotions involved, and they're just trying to go back and forth. But if I got the broker involved, it's like all of a sudden it's a heightened emotional response. I don't know if you've gotten that, Gary, but like to me, it's crazy.
I haven't, had that much issue. I mean, only last year did we have to kind of rework some of the deals just because of the interest rates jumping up and the loan to value was going backwards. But we did work with the brokers. But we had really good relationships with the brokers that we had. But retrading definitely is, for newbie investors out there, unless something major is, you got to build in your basic expenses. Like roof probably needs a little bit of work, some painting, some basic stuff you need to work in. But when there's a big cost or something that should have been revealed to you, then that's something that you want to go back and talk to the seller and try to work something out.
Yeah, we actually do it almost at every deal. We're so good at it. Like I'm telling you, like this is part of my routine. And my brokers know it now. They're like, listen, I'm probably going to find something. I'm not going to beat you up hard, but like, listen, most of the times the sellers, there's a Waldo at every property. Where's Waldo, right? There's multiple Waldos and your job is to find them. And when you find them, you call them out. You're like, hey, listen, this is not normal. And you don't even know about this, by the way. So my job is to always find out more information, to know more about the property than the seller. And then I have a mountain of evidence, and then I just use my attorneys to work it. And we've always been successful closing, right? There's only one time, like the one with the poop, we couldn't come to terms on that. It was so bad, right? It was so much damage that he didn't even know about, right? And we're like, dude, this is obsessive wear and tear. But most of the times we'll find a couple $100,000 or, even 150. I mean, listen, it all adds up and it's just kind of normal. And here's what I've also found. Brokers, by the way, have short memories. They get memory loss really quick. When you close, all they remember is the baby. They forget about the labor. And so as long as you know that you close, you have the right to retrade if you want to. And so we just find a way to try to, retrade for something here and there. Nothing too crazy, but I never try to do it through my attorneys or through the brokers, because that's a bad, we don't want to use them for that. We only want to use them when we really need help. If something's not getting done, we're like, hey, listen, can we get a call with the sellers? And usually those are for major milestone or things that are big problems.
And the truth of the matter is, for newbie investors, the next buyer, if they don't end up dealing with Corey, the next buyer is going to probably find the same thing, So they're going to have to deal with that at some point. So if you have something that's really meaningful, don't be afraid to have that discussion.
They'll have to address the elephant in the room, no matter what. And so if you come to with that type of level head, most sellers are wanting to sell and they know you want to buy. And they've already picked you, by the way, right? They looked at all the different applicants and they said, this is the one. And so they really want to go with you. And so when you get to that piece of like most sellers and transactions, they're willing to make it work as long as it's within reason, right? We've had to extend so we get done with the due diligence. Okay, now you got this period of time where you're going to go hard, right? And that's the for most newbies, this is the biggest part of the whole equation is when you've got to okay, I got $200,000, $300,000 down, and now I'm getting ready to lose it if I don't close. And that is, I call it the quickening, right? It's the one where you've got to am I going to do this or am I going to back out? Now, if you pull out right at that point and you start doing it once or twice, man, you're going to ruin your reputation so fast. So it is imperative that you build the right team in the very beginning of this phase, because this is not where you want to look weak. This is where you want to be great, we love it, we're ready to move forward. Because here's what I know is you can always ask for an extension down the road, and most sellers will give it to you, right? And so, and one of the things that we always do in our PSAs, and let me just give a little bit of advice here. So we've learned to do a 30-day business day close and a 30-day business days due diligence, and a 30 business day close. So that's actually 45 calendar days. And most people don't catch on to this. They do, but they don't, right? But this gives me 90 days, right? Now that's in my LOI. What I don't put in my LOI is the 30-day extension that I'm going to try to get for free. And my attorney, we know how this works. We always put it in there of hey, just in case, after that 90 days, we'll say we can add a 30-day extension with written permission or with written notice. And we always do it for free. That's how we try to redline it first. But we've also been had to pay $25,000 or $30,000. We try not to go above 50, but we'll pay for that extension if we need it, and then it goes towards your earnest money. But that gives you, that gives you now 120 days. 120 days is a long time to close. And even then, right, I've gotten to the spot where sometimes, financing is right now it's really finicky, right? You get to have a loan, and then all of a sudden that loan gets swiped away and you don't have one. And ask me how many times that's happened on a closing, right? You're like, geez Louise. And then, last day they're like, well, we went to committee. This one's we're not going to fund it now. You're like, what? You've already taken $60,000 of my money, and now you're telling me no? That happens more often than not, kids, right? And so it's not fun, but it is part of the game. And you got to be willing to play a big boy game when you're doing these big boy deals. But the benefits is to be flexible, but to really work with a good broker who's going to really navigate and have the relationships with the lenders that you're doing business with. Now, of course, Freddie and Fannie agency debt's pretty simple, but it's always the CMBS loans or, insurance companies, all those weird, or right now, if anybody's doing, what am I thinking of? Loans that are out there, bridge loans.
Yeah.
My God. Those guys are crazy right now. Those guys, they're having big issues, by the way, right? So, in my point of view is you finally you get past your due diligence, you go hard, and this is where you've got to make sure you make the track record and get to the finish line. And but I see a lot of deals actually go bad right here, and I feel bad for these people. But I've always learned that. Let's say I come in second place and I don't get a deal. I've learned to, make sure that I'm good friends with the broker. Let them know that we're still interested if the deal comes around, but it's got to be at my price. And we've had deals kind of boomerang back to us. Now, not every deal that we took do we do it that way, but we try if we can't, because it builds goodwill.
Yeah, absolutely. Those kinds of deals are fantastic because, yeah, you like the deal, you just are not willing to pay what the seller is looking for, but maybe he didn't pick up, you or me, even though they know we can close because they're greedy and they want that extra 200,000 or 300,000. And then now they've wasted many months and they come back and they're like, okay, well, we'll take your deal. And now by that time, we're probably offering a little less.
Yeah, exactly. We're like, hey, well, that was back then. Now we're at this price, but we'll close. And I've always learned, it's kind of a weird thing, but I've learned to really ask these questions. Is like, if you got to understand why your seller's selling, and the more you can understand about the why, the more powerful the more levers you have to try to understand where they're at, right? And most really good operators will understand this and understand the power and the value of understanding why someone's selling. And most brokers are probably going to lie in the beginning of why they're trying to sell, but they'll get real when stuff starts to break up, right? When things start to break up, they're like, okay, well, here's where we're at. Well, listen, could have told me this in the beginning. I had a feeling that that's the way this was, but right. But normally, you get to this point of from the LOI side. Now, the things that I left out is all the things you got to do, right? When you're in this game, there's about 5 or 6 different parties that are a whole part of the whole transaction. You got to have your PSA, your lawyer that creates the PSA. By the way, pro tip: don't let a broker give you the PSA. You give a broker a PSA. Purchase and sale agreements, what we're talking about. It is much easier to use your version of what your attorney's version is than to try to make. And we've had to do this before. We don't like it, but my attorney knows that ultimately we're going to make it look like ours anyways, right? And so using your attorney's purchase and sale agreement, way more powerful. It is built for you, not for them. And but it's also, they understand what's in that contract. It's not understanding what's in someone else's contract that can really get you. And contracts in this game really do matter, right? Covenants matter. All the things that everything's fine until a deal goes south. And then those details really do matter a lot, right? So that's your lender. Then you also got your loan originator, right? So you got to get them involved. And you got to get them involved pretty early now, right? I mean, especially you need to be talking to, when you first are underwriting a deal, what is in this marketplace, what does it look like? Because that lending environment has changed so dramatically in the last 6 months. And it's still changing. I mean, rates are still going up. And so you got to really understand what the game is and how you're going to get deals done. And I think that's more important right now than ever. But I also think, Gary, there's a lot of opportunity.
Absolutely. It's funny you mentioned how long the loan takes. I think we have a deal on the contract right now, and it took us, we had been working on the loan well before, during our underwriting and had some quotes. And it wasn't until 5 weeks at least into our signed PSA that we kind of really locked in on the loan, which is insane. It's never taken me that long. But I mean, that's just the environment that we're in.
Everything changes all the time. It's really weird. That's how this game plays out. And what was working, 3 or 4 months ago is not working now, especially in rapid changing environments. Now, here's what I love about that whole concept is that usually means that there's opportunity. When things are not just normal, steady, that means there's opportunity out there. And so the goal is always to find a needle in the haystack. And so you got to dig for a lot of gold, and you'll find some nuggets along the way. And so, but understand that not every deal is a deal. And once you understand that piece and being able to walk away, probably some of the best deals I've done are the deals that I've never did.
Absolutely. And, you hear that from seasoned investors all the time.
Yeah. And the ability to walk away and not get so tunnel, because like we fall in love with the numbers, guys, and not the deal. But I see a lot of new guys, they get so like, oh, I can get this deal. And they're trying to make it work so bad that they've now underwritten it to the best potential that it could really be. That's not obtainable, by the way. Right. And they put this everything's got to, like, the moon has to align with the stars, and it's like, an orbit that's got to be perfect, and all of a sudden, it gets a little wobbly, and you're like, it's going to blow up. And so, if I could give any advice to anybody, it's like, underwrite so conservatively that you've got to be able to sleep like a baby. You got to think about it. You don't even understand what the pressure is until you've done a real deal and you've got, $15 million of private money on top of this deal that's looking at you to make sure that this gets done. And that's a tremendous amount of pressure, guys. And you don't want that if you've sped on your underwriting. It'll be an impossible task that'll keep you up late at night, and it will really work on your mental psyche. So how do you avoid that? Man, underwrite like a conservative pro. And then do fat deals. Fat deals can get skinny and you're okay. But if you find a skinny deal and it gets skinnier, that's a recipe for, disaster, and you just don't want it. So stay away from deals that are not fat.
Great advice. Excellent advice.
And eventually to the LOI to close is, you finally close, right? I mean, you'll take this thing, you'll get the money raised. If it's your first deal, the money will always usually shows up the last day at the last minute that it could possibly wire. Or you have to get an extension. I've done that before too. Like, oh my God, I'm not gonna make it. I need to get an extension for 10 days or 7 days. Listen, you can negotiate more than you know at the end because everybody's counting chickens at that point. As long as you're close and you can show that you really are right there, lenders or everybody will work with you usually. But you close, and here's what most people forget is, like, the work is just now starting. Everybody thinks, like, I've seen so many, we made it. No, you've not done anything, right? You're just in the beginning phase of the whole journey, which is now the real work starts, and that's in operations. And by the way, Gary, I know you know this, but money's made in operations, in the buy and operations, executing your business plan. And there needs to be, I think we all got, there's a lot of investors, and there was a lot of education in the last probably 7 years, 5 to 7 years, where everybody looked like a hero. Okay, everybody that did a deal in the last 7 years, anything they did 5, 7 years ago, looked pretty good. It's done really well. But the tide has came in, right, or went out, and those people that were just, kind of loosey-goosey, that doesn't work today. You have to be an extreme operator, controlling all your costs, watching all the metrics, because that's what it takes in today's environment right now. That's where we're at. And for all the deals that were, a couple years old, especially so. For all those that you have, I have 4 bridge notes right now that I'm getting rid of 2 next month. And I got 2 more left I'm close, but I'm not there yet, right? And what's there is I got to get them to 90%. We're just, we're in a bunch of renovations. We're close, but these things got to find homes for new debt, and sooner the better. And I'm not the only one that's living this life right now, right? All of us are that did that. You can do deals in every market. There's just sometimes, luckily we underwrote them fairly conservatively, so we're not losing it. But we still have to pay attention. And paying attention to the game right now is really the world that we're in. And then for anything new, though, Gary, man, that's where, that's the play right now, is to buy today's interest rate. And if you can buy cash flow today, I'm telling you, and then you still do some micro repositionings or some upside value add, right? You get to tomorrow's interest rate. We have to believe that eventually what goes up will come down. And when it comes down, you're going to look like a hero. That's where I'm putting all my cards. So I am looking at this like the 2009, 2010. We're not exactly at the bottom, but we're close enough to start making some forward movements and kind of pushing some chips in. And that's what our team is currently doing right now, is we're getting aggressive in talking to brokers and trying to find the right deals.
We're on the exact same page. We feel like exactly the same. There's going to be some good opportunity out there. There's good opportunity out there right now. A lot of buyers are just, the pencils are down. Other people can't figure it out, and we're going to be looking back 6 months, a year from now, wishing we bought more stuff now.
Yeah. Some of my biggest regrets in 2010, 2011 is I didn't push myself harder. Right, I was still kind of new in the game, but man, I still tell myself, Corey, you should have pushed harder. You could have raised more money if you just would have just did it, right? And put yourself out there. And because, oh my God, and here's the thing too. 5, 7 years, 10 years from now, we'll all look at the real estate prices, but boy, that was cheap back then.
Yep.
That's just facts. So when's the great time to buy? Today, right? Buy today if you can, but you got to make sure that it makes sense and works. Buy for cash flow. Don't buy for it's hard for me to buy in markets like Arizona. I live in Arizona, but in Phoenix, it's really hard to cash flow here. And our markets are a little bit more extreme. They go up and down. And I don't have maybe if it was on my own money, I think maybe that's where I go with it. Like when I sell some of my Midwest and South properties, I'll take my money and invest it here in Phoenix, right? Because the upside's great. But you got to be able to weather that and not be able to cash flow for the first couple of years. And right now, that's just not a risk that I'm willing to take with capital, with private capital.
Well, Corey, I appreciate you coming on the show and talking about, from LOI to close, what could go wrong, because there are a lot of things that could go wrong. Where can people find out about you and your company?
Yeah, you can go to Kahuna Investments, and I would love to give everybody a copy of my book. I have a book called Copy Your Way to Success, Standing on the Shoulders of Giants. You can get this by texting the word book to 480-500-1127. So text the word book to 480-500-1127. We'll ship it to you for free. But it's just a good story, a journey of what it takes to be successful in real estate. I was never that smart, Gary, but I was a really good copier. My teachers didn't like it. I call it modeling success. It's a little nicer, right? But I've modeled my way to success to a wonderful career in real estate, and it is a beautiful journey.
Awesome. Thanks for sharing that resource. It'll be in the show notes. And this is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. Thank you. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.